Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So, interesting day today. For the past 4, 5, 6, 7, 7 traders have been kind of scratching their head. The S&P isn't falling apart. It's in the same spot. Meanwhile, the VIX is up for consecutive days. The Russell's below a key point, and a lot of high beta tech stocks that came out with decent earnings were sold. So then today, finally, the S&P played a little catch up, but then what did it do? It hit its 200-day and bounced off it. Usually the first time you hit a major moving average, you do bounce off it. It doesn't mean that it won't get through there the next time or it's a screaming buy opportunity, but for those who, got out when we broke the 8-day, the 21-day, or the 50-day, you know what? You had the opportunity to try, the 200-day. Plus, if you are, a Redler All Access subscriber, there's lots of different types of tactics in the note, based on, where things were pivot-wise. And I think a lot of people had a decent day, considering that, some guys came in along the minors and the metals, even within this little move. But anyway, let's just get to the S&P cash so you can see, most of you guys have probably been sitting pretty much wrist down regardless. We've talked about how, the resistance has become support, but getting very vulnerable. What does vulnerable mean? Vulnerable means that you are below major moving averages or momentum moving averages. Okay, this has been, resistance that's been sold. So we've been below the 50-day pretty much since September, and then really right around here when it couldn't hold the 8 and 21-day, I think was when the writing was a little bit on the wall. Just to be a little bit more careful. 2144, 2142 kept being resistance, and then we would come in not only below the 50-day, but below the 21-day, below the 8-day, and today, it traded below the 200-day and came back above it. To be honest, I did not go long it. I actually sold my VIX calls because it was a decent trade. Okay, I just took it off. We've had it since last Wednesday. At this point, we have a new point of reference. You have 2097 back above this 200-day moving average, which is the EMA. The SMA is actually lower. But we'll see how long it takes to get there. The spiders itself did break below many pivots. And if you judge pivots, you can get out of the way when it happens. You had a few of them today. First thing the market had to do is get below 212.36. That's why I list pivots every single morning on Twitter or in Redler All Access. I said this morning, 212.36 is pivot low from yesterday. You get below there, then you watch 211.71. You get below there, then you have this pivot. So each step along the way, whether you were long and reduced or whether you tried to short this, or short there, and you could have even shorted there, but then obviously at some point, you have to figure out what's a good spot to cover, or at least a portion, considering this is now, besides this was a down day, 1, 2, 3, almost 6 down days with an oscillator minus 65. So, you want to make sure that once it gets below pivots, it stays below pivots, otherwise you adjust. And again, if you look at the spiders here, this was actually the last time it was at the 50-day, which was on October 10th. So pretty comfortably below these momentum levels. So we'll see what else that adds to. We still have 6, 7 days until the election, so there could be a lot more volatility. The Russell itself, this was a bit of a red flag too. This got below the, the 120 here. It's been below the 21-day since breaking there, and now it kind of came into the 200-day, and it's a little bear flag here too. If some guys might still be shorted, I would think at least don't be long. I don't know about being short, especially the way things are right now. Sometimes cash is a position. And then you think about, in the last week, what's transpired to help give you some thoughts on whether or not the tape is constructive or faulty. One thing that comes out to me is Google. Google made a new all-time high by 50 cents, okay, then sold off $20 on that day of earnings. Okay, Tesla last week, gapped up $10. They beat. I think they didn't raise guidance, but they backed their production, and not only did it open up $10, it went red. Okay, if they wanted a momentum name to hold in there and be reborn, that should have, not got sold off on that day. Apple, missed, not a big deal, just put it out of favor, put it in the penalty box, and then obviously Amazon, missed. So just, there's not much momentum. And then yesterday you had, Netflix come in a little bit. So anyway, So signals and signs. Tesla. Okay, what's a signal and sign? Well, 213, remember we talked about that being resistance. Well, the 200 rejected it. It opened up and failed. That is a sell signal. That is distribution. That is not accumulation. And now look where it is. At this point, down 4 days, it's oversold, but it doesn't mean it's a buy. But anyway, that was a signal. Google also, quality name, great earnings. Went up, tagged the high, tagged it. Didn't fall off a few dollars. It fell off 20. Okay, and now it's back below here, and I guess this is your new support, but that also just ugliness, pure ugliness. Especially if you're a momentum trader, that shows you there's just a lack of. Amazon, what did we talk about today in Amazon? Okay, if you think about what Red Dog said about the 50-day moving average, that that could be resistance to sell. In the first 15, 30 minutes, if we went up to 799 to 803, perhaps short verse that high, and then see what happens. It's an exact statement from the video and the note, etc., etc. And sometimes it works out well, and sometimes it doesn't. For this one, if you were looking to short strength, well, here you go. This went right to the spot. Okay, so there was something to do there. Shorted it the freaking 50-day or versus the high of the morning. Okay, that actually went to 884, and then let it go. And if that's you, and if you like to be short, I'm your offensive coordinator. There you go for that trading. Now you'll figure out what happens here if it does continue to the downside. This is a big hole in Amazon right now. So usually a stock like this fills the gap if it has the strength to. This tried somewhat, but didn't have the strength. So now there's a gap here, and we'll figure out what's next. Apple, I tried it today. It didn't work. Apple also, gave you earnings, came off that earnings low, came here, could not trade into it, and went lower. And then what happened? It broke the post-earnings low, giving you another move down. And it didn't hold the 50-day, and it did come off lows, but I guess at this point, it's going to need some time still. The low here was 110.53. Below the 8 and 21 day with a hole, that tells you got to be a little cautious. So lots of little reasons to be cautious with not a lot of momentum out there. So with that being said, Facebook, has earnings tomorrow. They usually sell a good earnings report anyway, so that's why some guys were probably, lighting up anyway, because if you can't have a Google with a great earnings reporting guidance, make and hold, momentum highs, why are people going to be rushing here? Okay, so anyway, below the 8 and 21 day, here's a 50-day. I do think it's going to be a good report, but there's not even an option play to play it. The 130s are freaking 3.5. The 133s are 2, so you need 135 just to break even. So maybe we'll just trade it after hours. We'll figure it out. That doesn't come out until after the close Wednesday. BABA, there was a report about their accounting, et cetera, is off lows. Its earnings are tomorrow morning. I did take off my 105s. I just didn't think that it was worth. There was a dollar premium. I think we bought them when they were here last time for like 2 and change. So I just wanted to salvage it because it's just not worth the risk. It's hard to make money in this market, let alone sit in an option trade that needs to get above 105 to 106 just to break even. That's why we also got out of the Amazon and Googles before then when things started to falter. The VIX, it's a nice trade. You look at the disclosure. If you're Redler All Access, you saw it. Me long it here and sold some on this day, and I sold the rest today. And now we'll figure out if there's a way to buy it back, or just that was a nice little, a nice trade that helped me with my, small little other option trades I had on to keep that account, in a good spot. But now there's a lot less. Last time you had this move, boom, it fell back down. We'll see if this one holds. You still have 6-7 days to the election. All in all, though, they're not giving away money in this market, which they never do. Sometimes it's more conducive, sometimes it's momentum, sometimes you're in an uptrend, versus this situation where we're very headline driven, and there's been I was talking to Chris. He sits next to me, so you always listen to him on the radio. He's been pointing out these weaker signals for a week, but it takes so much time for these things to transpire, so they wear everyone out. Range resolution usually happens when they wear everyone out, whether it's the upside or the downside. So, I mentioned, in the last 2 weeks, if you got caught today, maybe got stopped out at the bottom, or you wanted to be short and you were short last week and they stopped you out, and then today was the move you wanted, write some of these things down in a journal. The more you write things down about things you did well or about things you need to work on, the more you create an inner voice that will help you make decisions quickly and help you stay with trades, that don't change. Today there was a little bit of money in TWLO. Not a heck of a lot, but all in all, for the first time in a multiple days, it showed a little relative strength, didn't make a new low while the market went below its previous week's low. We actually made a little money off the open, but earnings are on, when are earnings? Earnings are Thursday, so, if you had to be long something overnight, maybe you're long a little bit of this, but still, that's, this stock's a broken name. Look at this level that broke the prior resistance, should have turned into support, it didn't, broke the 8 and 21-day here. You write that rule down. When momentum names that are in uptrends, that have shorts trapped, break the trend line and get below the 8 and 21-day, you get out of the way, even if it hurts. Okay? So if you got out of the way when this broke 60 into the 50s, you didn't have to deal with this thing go all the way down to 35. And you weren't in there for when they obviously announced their secondary with 40 and broke price. So always ways to maneuver these things. At this point, it's below the 8-day. We'll see if it can rally back to that. ACIA, the cousin. Also, a tiny bit of relative strength today, but not a whole heck of a lot. This too, gap down right here. This changed when it broke the secondary price. That means everyone who got the free lunch said, oh, I'm going to wait, I'm going to be a good guy. Uh-oh, sold. And every rally, sold. Broke another level here, sold. And now I guess you'll see if this holds. Doesn't look so conducive right now. Earnings aren't for another week or so, so shorts aren't that scared. But, if I were someone here, I would not be short this now after the move lower, but this doesn't necessarily mean it's a long. And you do a level versus a level, like maybe if you were long here, you sold some, you held some, you got out because you don't want to be in that. A lot of different ways to do it. Here too, this was your level. Maybe you were long, got out of some, broke this level, you got out. That's what you do in these type of names because you never know how long they're going to go or how low they're going to go because, look where it came from, and the last thing you want to do is be caught, to the downside. Same way on the upside, you don't want to be caught short when something's above the 8 and 21-day because this could have got you squeezed out before that. Can't do the same thing on the downside, buying it while it's not ready yet. Okay, it's extended from both moving averages. It's definitely worth a look and worth an intraday trade, but it's not worth an accumulate. At some point, maybe it breaks above this and gets to the 8-day. We'll see if we get a signal for that. We went long the metals and the miners. I got out a little early in the morning, but whatever. I don't like this group as it is. I was thinking we'd get a gap fill, and basically that's what happened. Okay, got through here, filled the gap, came off it, touched the 50-day, was a little resistance. So we'll see what happens tomorrow. I am not long this overnight. I took it home last night just because, I don't know, a lot of guys were doing it. I wanted to be social and show that I do trade the miners also when it's set up, and this was a decent setup. And, 1, 2, 3, I would think it's a little bit of a sell. Same way here, 1, 2, 3, and then it got choppy again. GLD didn't quite get into the gap. Came off the highs here. But, I don't think it's a long or a short. I just think that if you were long overnight, because it was acting well into the close yesterday, hopefully you sold at least half. And if you're holding some, okay, hold some. That's what you do. So in summation, we're going to be dealing with this kind of market, I think, for a while. We were grinding lower. Then you saw that speed pick up into the afternoon when we broke below that 2100. And then, you had a flux of volume and things came off the lows. And if you want to look at something, if everyone's like, oh, Redler, what could you have seen if you were short to cover, et cetera, et cetera. Here you could see on the 5-minute chart before I end that, not the easiest thing to judge, but here was your acceleration down and then your quick move up. Okay, and then what happened here? It held higher. So if you didn't catch this, which was hard to catch this, and you were looking for a day trader, looking for a spot to cover, quickly came up, penetrated this little resistance, came in, gave you a little bit of a wide range bar here, so maybe you were long 210.50 versus this recent low here of 210.11, and then you made for yourself, 50 cents or so into the close. But that's, what you could have seen. It was hard to see anything here until this igniting bar, and then once this igniting move happened, it held higher, and that could have been a small day trade for you if it was worth it. I just avoided. Now we'll see what happens tomorrow. Do you get a move back to here, or do we open back up at the lows? I think it's a little bit of a coin toss. That's why I'm very light overnight, and I'll figure it out. We gap up, maybe you short into there. We gap down, maybe you buy verse here. And then you can do the same thing with a lot of different other names because we're smack in the middle of these ranges. So in closing, hopefully you didn't get caught today. Hopefully you made a little bit of money, and we'll probably have a lot more of this. We have the Fed tomorrow. We have jobs report Friday, and then the election's next Tuesday. So don't feel like you missed anything, but also don't just hold your nose and go underwater either which way. I'll see you in the morning. Have a good night.